Axon Enterprises, the company formerly known as Taser and the Taser, that is still the product that they have a little monopoly on. The company, fast growing business and a lot going on that is notable, especially as everybody is getting interested in physical AI coming out of the data center and getting deployed in devices. And as that's happening, Axon is making use of this, and they're becoming, let's say, less of a product company and more of an infrastructure company, enabling public safety. And they have this goal of reducing gun-related violence by 50% over the course of the next 6 years or so with what they're doing. So hopefully that's something we can sidestep some of the controversy and everybody can at least get on board with that as the goal for the company.
And we'll talk a little bit more about some of the products and services that they've added via acquisition, especially in these last couple of years. But let's take a look at their revenue breakdown. They've had significant ramp up in revenue. This is on an annual basis, product revenue in gray and services revenue in orange. That services revenue is actually growing pretty significantly, isn't it?
Mm-hmm. Yeah, it certainly is. We'd expect as soon as this year, 2026, for services to overtake product revenue. And product revenue primarily is going to be made up of the Taser. They're on currently the 10th gen Taser 10, I believe, as well as the newer body cam business. So those wearable cameras that now also have connectivity and embedded intelligence in them as well, that do things like voice transcription, but there's now a lot of services attached to those as well. So sticky business, and starting from that basically small monopoly in the Taser and getting massive expansion, 33% year-over-year growth in 2025, closing out in Q4 with nearly 40% year-over-year growth in Q4 alone. So some acceleration there driven by, as you said, Casey, some recent acquisitions. We wanted to take just a second, though, and talk about, as Axon expands more into services and enabling infrastructure for public safety, who exactly is their biggest competitor that they're starting to bump up against? And this is a company we've talked about recently because I think Michael Burry inadvertently brought it to the world's attention, meaning to use it as a reason why 100-year bonds are a really terrible thing, but ended up pointing out Motorola Solutions has actually been a really fantastic investment since the dot-com bubble. Company that nobody really talks about or knows anything about anymore, but they're very much still in existence and doing more than fine.
Exactly. And why is there no meaningful competition? Actually, this is a good time for me to bring up an article you wrote about the monopoly of Axon. But let's talk about a little bit Motorola Solutions. So LMR, land to mobile radio in blue. Orange, video security and access control, and command center software in purple. Doing quite well. I'm impressed with Motorola.
Yeah, double-digit growth reported in Q4 2025 as well. Obviously not nearly 40% type of double-digit growth, but low to mid-teens percentage revenue growth for a company this old that nobody seems to remember anything about. Hey, I would say is not too bad. So to answer the question about why is there no meaningful competition, it's the Taser product where there's no meaningful competition. But pretty much everything else Axon has expanded into, there is very much a lot of competition within body cams. We're going to talk a moment here about the drone business and also the anti-drone security business, command center software pointed out on the last slide. Let's spend a second on that because all of that we would classify as infrastructure hardware and infrastructure software to help enable safety services. It could be something like 911, call taking and dispatch. That was the rationale behind Axon purchasing the startup, the small company Carbine. They just recently finished that up. And so that is now helping power their prepared software that helps with 911 services in the US. And so that very much has a big competitor already in Motorola. And then also in some of the infrastructure, actual hardware itself, they have the wearable cameras now. Those are a bit more famous, but they've also expanded into fixed cameras as well. Also in-vehicle cameras that power things like this newer service they just launched and are getting ready to expand further this year. automatic license plate detection. So a police officer makes a response and automatically gets a bunch of information on the car they've pulled over and who might be sitting in that car before they even get out and initiate a conversation. So a lot of things going on right now at Axon by way of acquisition and organic development.
And this is where there's a lot of similarities with Motorola. These are just a few of their offerings: video security and access control, that's fixed video and security access, maybe at events or in city centers, mission critical networks, and a command center, similar to what we just looked at with Axon as well.
And look at the TAM, total addressable market. You'll actually see some fairly similar numbers that the two companies share independently of each other. So very much swimming in the same lane here and competing against each other.
Okay, tell us a little bit more about the drone acquisition that Axon made.
This is another recent acquisition that was made at the tail end of 2025. They completed this startup called Dedrone. They sell drones for public safety as well. This is more like drone defense. So this is pretty crazy, futuristic sounding stuff, perhaps, but a lot of sensors, radio frequency along the bottom, some of the hardware necessary to run this Dedrone software, radio frequency or radar or camera sensors. They also have jammers and also some invisible defense layers, take over control and kinetic energy defense. Who would need something like this? There's a lot of emerging threats coming that are enabled, I guess you could say, by drone technology, especially as they get smaller, they get more quiet, the camera technology improves. So it could be anything from corporate espionage, maybe a company that needs to protect its critical assets from snooping, from competitors, also government organizations, defense properties where there would be some sensitive assets contained therein that you would want to keep foreign actors away from. So that's who would want this. It's pretty niche at this point, but
it sounds like it.
Pretty niche, but interesting technology and probably growing use case for this type of stuff. Everybody wants AI at the edge, physical AI, but there's risk that comes with that when you start embedding intelligence into literally everything. That's the trade-off. We're starting to get more and more towards the George Orwell 1986 type of stuff here. And yeah, surveillance, anti-surveillance, counterintelligence.
James Bond. That's what we're dealing with here. So these are some subscription services from Axon.
When they started selling subscriptions, they did the rebrand from Taser to Axon to encompass more than just the main product that they started with. The sticky recurring service was pretty minimal. But as they've added services over the years, they've been able to increase the amount of the subscription packages. And you can see on the far right where we're at now, quite a bit gets included with these devices that they're installing. Again, anything from the wearable camera, some interesting things happening here. Everybody kind of consumed with the Meta smart glasses that can do real-time translation. Well, you don't have to have glasses necessarily to do that. A wearable device with a camera can also pull that off, perhaps even more efficiently in a less intrusive manner and help in various applications. So there's just one example of what is included now with these Axon subscriptions. And as they add more software into the mix, these subscription plan pricing is increasing over time.
That's an interesting statistic there on the bottom right. 95% of the revenue is tied to customers with a subscription plan. So pretty much no one is buying hardware and not using the software as well.
Big difference from the old Axon, especially when it was still just simply known as Taser.
And now they have a very wide ecosystem, lots of different products, services. This just gives you an overview of some of that. Acquisitions they've made on the left there, partnerships they have on the right. Pretty solid business. They've got a lot going on.
Yeah, and this is why we now consider this more of an enabling infrastructure play than just a simple point product, because all of this stuff that they're offering is enabling in some form or helping increase transparency or public safety organizations. So for example, train and prepare part of what they provide with the sale of Taser, an electric weapon, is virtual reality-based training so that law enforcement agencies actually make sure that men and women that are going to wield these things know how to best use them and not just electrocute people, but try to de-escalate first. That's ultimately the goal with this sort of thing. In the middle, communicate and act. We already talked about that a little bit with things like the 911 system, live translation, analyze and report. This has now actually been around for a while, but one of the acquisitions they made some years ago was for data management and reporting management. So law enforcement, at the end of every day, one of the last things you do is you write a report on what happened during the day. How do you manage all of that data? How do you manage investigations? All of that can be done within Axon. So sort of a cloud-based software business here as well.
Let's take a look at their guidance for fiscal year 2026. You said 33% year-over-year growth from 24 to 25.
Mm-hmm.
The revenue growth for fiscal year 2026 expected between 27 to 30%. So a little bit of a slowdown, 2.8 billion total in fiscal year 2025. But they're expecting by 2028, they'll have 6 billion in annual revenue.
And that is why, at least as of this morning, the market decided maybe the sell-off in Axon is overdone, and we got the little bit of a bounce in the stock price. Because that guidance, which doesn't include any additional acquisitions that are made between now and calendar year 2028, assumes a roughly 30% revenue growth rate from now until then. So over the course of the next 3 years, that's pretty solid organic growth outlook. Investors obviously very pleased with that. And to top it off, the second important part of a growth story is the operating margin expansion. In this case, they use adjusted EBITDA, earnings before interest, tax, depreciation, and amortization. They're expecting about 25.5% EBITDA margin this year, expanding to 28% by 2028. Now, adjusted EBITDA, we like to use that meme that we made, classic blunder using adjusted EBITDA to evaluate a business, but you do get a little extra clarity here with Axon. They do give us some guidance on what that actually means in free cash flow conversion. By 2028, they expect to be around the 60% adjusted EBITDA to free cash flow conversion mark. So basically what that means, if you calculate adjusted EBITDA, you take revenue, multiply it by 0.255 to get what their expected adjusted EBITDA is for calendar year 2026, and then assume 60% of that becomes free cash flow. Well, now you have something more along the lines of what you can use in doing a cash flow analysis,
which we'll do
in just a moment.
Diluted shares outstanding in gray, and then the orange line free cash flow per share, because this is something that you called out in the past. They do provide a lot of stock-based compensation, especially recently. Mm-hmm. And so there has been some dilution in share number.
Yep, the founder, CEO, getting some stock-based compensation awards for performance, as well as, of course, when you become a software company, the trade-off with that, yes, it's asset light, but it doesn't mean that it's capital light in all forms. Employees need to get paid, and especially software engineers want stock-based compensation. So that's also in the mix. Making acquisitions via stock also incorporated in there. In total, though, you'd see why the stock sold off last year, 2025. Free cash flow on a per share basis took a pretty heavy hit year over year because of the heavy pace of acquisitions they were making. Also, a lot of investment in building out their capabilities in manufacturing new product, new hardware, building out infrastructure for their cloud software. A lot going on, but is expected to be the low point, management said, for the free cash flow downturn. And they expect this metric to start rising again pretty quickly as soon as this year. So let's actually use 2026 as a starting point. And we went ahead and calculated our estimate of what free cash flow will be based on the general guidelines we were given by Axon on the earnings call yesterday.
I'll go back here just for one moment. So share count, you can see 82.4 there in millions. And based on Axon's less than 2.5% dilution target in the next year, that'll bring us to 84.5 million. So that free cash flow 2026 of 459 million divided by that share count gets us to $5.43. And that's what we used there at the top in the custom weight box. Growth rate of 25%, 10-year period, terminal growth rate of 5%, discount rate of 10% gets us to one scenario, which gets us to the stock price where it is-ish right now, about $520 per share.
This is the trick with high growth businesses. This is why you get lots of volatility around earnings season, because the variability in future cash flows is so high. And now we're getting this big rally for that reason exactly. The market is now happy again because the outlook for cash flows is looking up once more for Axon over the course of the next 3 years based on their 2028 guidance. The volatility has a lot of momentum behind it. So when the sell-offs happen, like in recent months with Axon, it can be pretty severe. And then suddenly the narrative is going to change now, and you're probably going to start seeing headlines all over the place about how Axon is a top physical AI investment, a top bet on embedding intelligence at the edge, whatever, so on and so forth.
That Moat and Monopoly will be used.
Yes.
Moats, Monopolies.
Monopolies.
Yeah, it's going to happen.
We need a third M.
Yeah.
Moats, monopolies, lots of money.
Moats, Monopolies, money. We could somehow make an M word for bottleneck.
We can probably come up with 3 B words too.
3 B words in. Anyway.
Bears beats bottlenecks. There you go.